Good evening, everyone. Good evening. My name is Adam from Trade with Precision. Please let me know if you can hear me. I've got green lights on my side. The sound should be good, so please let me know if you can't. Hi, Diana. It's good to see some regulars coming back. I recognize, wow, there's a lot of people tonight, but I recognize about 50% of the names, so that's good. Good, thank you. Okay, so guys and girls, thank you very much for joining me. My name is Adam from Trade with Precision. And this is for the IC Markets webinar. Tonight, the topic is, has the bear market officially started? And so, this refers principally to, I think we should have a look at the broader markets. And again, if you attended my one on cryptos a couple of weeks ago, we were talking about those major support levels and how they were tied to equities, and you can see that it still continues to be the case. So I'm going to have to refresh that for the benefit of some people who are attending tonight's webinar as their first one. Okay, so please bear with me. All right, so there's a couple of risk disclaimers I need to give you the opportunity to read, and while you're doing that, I'll give you some background behind myself. So I am based in the City of London. I am a trend-based trader or momentum-based trader, and that's really important when it comes to identifying market conditions that have a high probability of kind of going our way. And I trade everything. I'll trade anything that's on the platform. I trade my own capital, and I also trade clients' money. And that's not a solicitation, it's just giving you some background. And I'll trade anything as long as the liquidity is there, the trend is there, and I can trust that the execution is reliable. That being said, I don't believe in trading obscure markets that nobody's ever heard of. But thankfully, I would say cryptos don't qualify. So, all right, so on the agenda this evening, we need to talk about crucial support and resistance levels for the crypto market, charts analysis for many favorite assets such as Bitcoin, Ethereum. We're not going to do Solana. I finally have a live account. I did say I was waiting on one. I finally have it, but it is on MT5. And so I will do that next week or in the next one. I'll make sure I install it. I just didn't get a chance to do it today. And then also how we go about sort of creating a definitive watch list to keep an eye on for future trades. And this is a really cool little thing here, because if you're very new to trading, let's try highlight that color a little bit differently. If you are very new to trading, you might not be aware that we can kind of identify areas where there will likely be trade setups in the future. And so we create a watch list that, where we might have to wait a few hours or maybe a few days for a setup to occur. And I think that's pretty cool. You don't just open up the platform and go hunting for a setup. That's not how traders do it each day. We usually are aware of, like right now, for example, we've got a really strong dollar. So when we look at currencies, we're looking to short euro, dollar, pound, dollar. I know that already. That's my expectation. We'll see what happens with the FOMC tomorrow, but that's my expectation. And so therefore, that's how we go about sort of creating that watch list. It is also, and I don't know how you guys are doing, it is also very, very hot in my office at the moment. So I've got both the doors open. I'm trying to get some airflow in here. So let's go over to the platform and have a look here. All right, and can I just do a quick survey? How many of you are using the CTrader platform, and how many of you are using one of the MT4 or MT5s? Just to get a sense of kind of what the split is. Okay, yeah, I mean, I use everything. I think almost everybody these days should become familiar with MT4. MT4 and MT5 are essentially the same. Certainly in the ways that matter. Okay, and so I've got a different layout here. Let's just go and have a look at my cryptos. Let's just load that up. Oh, wow. Okay, so here we go. So far, everybody's come back with MT4 and MT5, and it turns out I'm the only person doing it on the CTrader platform. Okay, that's a bit. I apologize. So I'll make sure that I am up to that. I've moved over to the platform for later in the week. I'll install it tomorrow. Okay, so this is my usual crypto layout. So one of the things that we've discussed in the past, and I had to refresh this, and again, at the risk of annoying those of you who patiently are re-attending these each week to see what the update is on the analysis, there's a high correlation between cryptos and equities, more so in the last couple of years, because really simply put, as in fund managers were looking for places to put the extra money, clients were saying, look, I've got enough Microsoft, I've got enough Apple, what else have you got for me? And always keen to sort of sell their clients something else. It looks as though big institutions with very deep pockets started to look into cryptos. And it didn't hurt that, Elon Musk kind of gave it a bit of a thumbs up, that it kind of got recognition. But that's essentially what started to drive a lot of that money into it. And so what I want you to take away from that actually is that all that's now happened, and this is important to understand, it's actually really critical, is to understand that cryptos have now become part of the, I don't want to say bouquet, the buffet of instruments and asset classes that the big hedge funds will start to invest in and diversify with. And so that the reason it's important to say that is that means that we can't just look at cryptos in isolation anymore, guys. There's going to be correlation. They're going to be linked to other things now, simply because of just that's how the money game works. There's bonds and equities, and and there's currencies, and a strong dollar and gold. They're all they tend to rub off on each other. And so it means that we cannot look at cryptos in isolation. Okay. The biggest market in the world is the currency market, which is bigger than, I think, the futures markets and the stock markets put together. It's absolutely huge. And I think the commodities markets as well. And then you've got cryptos, which is growing at a really like an amazing rate. So the other thing that I spoke about in the past, I'm just going to recap on this, is it pays to think of cryptos as a digital commodity like gold. Okay, so we can mine it just like we can with gold. If we lose that piece of that golden nugget in our hand or in our pockets or whatever, we lose it, or at the same time, if we sell it on the market, we can only get what it's going for in the market. And all these things really just stem from the fact that human beings kind of create value. We identify something, we then attach a value to it. So with gold, for example, nice and shiny and coveted, and so that became something that was then ultimately the basis for our original financial system that was then replaced by fiat, which is paper money. And now, of course, we've got digital currencies. So I think sort of the way we move from paper to digital is not really the big deal. We've already disconnected from gold. What we really need is a way to just where was I going with that sentence? It's fine, never mind. So what I want to do is get a sense of what is going on in the global markets. Okay, so let's start off with the S&P. The reason I'm going to do the S&P is that there are 500 companies in it. They're around the world. Most of the brands, and so they are a great indicator of sort of the global health or the financial market. So, for example, if we go across and have a look at the DAX, and then we kind of bring this one up to the monthly, so let's switch it up to the monthly, get some perspective. And this is crucial because we managed to break through here, find breakthrough resistance, come back, and we're in this area where potentially we're going to find some support. Now, the biggest drivers of what's causing all of this inflation, and again, this comes back to cryptos, the biggest drivers are essentially sort of tied to quarantine and COVID, getting supply chain issues, on top of which we now have this war, Russia invading Ukraine, which has added extra uncertainty. And then we've got, and then of course, so what happened, I think, is really a lot of people decided, okay, we finally got pay rises. Now, I can fix up the house or I can go on holiday. And so we got that, just that acceleration in terms of inflation as well. But it is tied to that. We need to understand that the war in Ukraine has put pressure on foods, on wheat, on bread, on sunflower oil, on energy, Russia as well in terms of energy or oil, potentially putting more pressure there. And so we have, these things are adding to this inflation. And something else that you need to be aware of is that the single biggest mover of what drives the currency markets is the central bank's interest rates. Okay, so if we, for example, if the UK, if the central bank interest rate is 2%, then that obviously means that the GBP is going to get stronger if it goes up to 3% or 4%, you know, and that's what they have to do to curb inflation. We're going to start to see a currency strengthening, and that's what's been happening with the dollar. So the dollar, in addition to there being a little bit of panic, it's actually strangely been a lot more about inflation. So with regards to the rate hikes, what actually happens is we tend to see money. Most people don't know this. Again, the single biggest driver in the stock market is interest rates. So when there's when we do QE and there's stimulus cash, and a lot of big institutions can borrow 150 million with either have it forgiven or with little to no interest on it, and then put that money into the stock market, and then they can make money. You know, obviously they'll make anywhere from 10 to 30, 40% on some of those on that free cash, which is ridiculous that they are able to do that. And so when the interest rates go up, usually what they then do is go, okay, well, we're going to have difficulty paying back our loans, or we don't want to borrow money anymore. And so what they often do is extricate themselves from the market. They tend to liquidate those positions. And so we can see that you can tie up when we have a really important or major correction in the markets, that we can link it up to, historically, we can link it up to where that increased rate hikes and the increase in rates came from. So you can see that we've been talking about it for a while now. The other thing we have to see here before we get over to the cryptos is you can see that the market has been steadily climbing, and this is a monthly chart for the S&P, but it had a really big, very strong booming period without any kind of a correction, and it must have a correction. It must have it every now and again. So usually you would have 5 or 6 candles away, come back, you know, 5 or 6 candles away, come back, and what we've started in the last sort of 4 or 5 years is we tend to get these big moves that are just long sustained moves, and then consequently the correction is really big because we haven't had, it isn't, you know, the angle is also a lot higher. So the angle in this particular case, you know, here it's very steady, it's going at about a 35 to 45 degree angle, then it starts heading up like this, it starts getting more aggressive, and so usually we have a stronger correction back in line with it. And also, if you just kind of draw, if you can imagine drawing a line, let's do this actually. If I can do it with a trend line, I'm going to do this. So what I'm going to do now is I'm going to analyze the global indices to get a sense of where cryptos, because they're correlated, what, you know, kind of what the danger is there. So I just want to draw a line kind of that runs through the middle of that. It runs right through the middle. There we go. And so it just runs generally through the middle of that market. And so you can get a sense of what the true value is. Okay, this is just kind of the market. The market doesn't know where its true value is. It has no idea. It doesn't know where the perfect price is to buy or perfect price is to sell. It figures it out as it goes. And so without trying to, it's orbiting true value. The only time it knows it's kind of missed the mark is when it goes past it. So if it goes down below it, it tries to come back. If it goes above it, it tries to come back down. And so why I'm really doing this is to get a sense of, you can see where the majority of price action has been here and where it has been recently. This is unusual, and the market was due for a correction. So market's coming back down into this area, and this area is where I would say we are closer to true value. In addition to that, I'm going to throw on a fib retracement. So we'll measure a fib retracement from the low and see where we are. Okay, so we've come back about to the 382 in that area. We haven't even come back to a 50% retracement. If we move it up to the previous lows, we're down at about a 618. Okay, so overall, this is not insane. It's a really nice, you've got to understand that we have to have these. The more the market goes up, the bigger the corrections are going to be. And the correction should be seen as, you know, we know that at some point the market's going to turn around, and if as an investor, that's going to be great, because it means as an investor we can finally manage to buy some of these blue chip stocks that have been so expensive for so long that we can maybe get back in. So that trend line just gives us a general idea of, if you run it right through the middle of price action, you kind of get a sense of where that true value is. And so we're not that far off. I think it's reasonable for us to expect that price will turn in this area somewhere, and probably more specifically in that area. Not on the trend line, it's not that kind of a trend line, it's just a line. And we can see and expect the market to do that. Okay, so then the other thing that I spoke about last time, so now we get a sense of, okay, the markets have retraced quite a bit. They've largely come back you know, we're not, that this correction is not something that's necessarily a problem. We needed it because the market was overpriced, things were getting out of control, and we needed to do that. So this is normal. So there's one more thing I want you to take away from this webinar tonight, please. Inflation we've always had to deal with inflation. Whenever there's periods of growth, the inflation follows, you know, close behind, and we have to fix it. We have to do something about it. So please understand that in theory, there's no reason why we won't get through this. We will at some point, because it's just part and parcel of growth boom cycles, is that at some point there's, you know, there's inflation and we have to, and then interest rates go up and then the market has a correction. So all that stuff is just normal. It's happened, you know, 50, 100 times before. And so there's no reason at this time to think that we won't get out of it. And it is just literally just part of the cycles of the market. It's a very healthy way to do this. Okay, so no, and Don's asking a really good point. He's saying, look, I get the point of inflation, but what about the potential recession that everyone is talking about? So I find, and this is just me, this is my personal thing, that my brain has to be flexible. Something is only real when the market confirms it. So that's the approach I have to take, which is not to say that we couldn't necessarily go into a recession. And this is where the danger comes from. If we don't curb the cool down kind of the pressure fast enough, what happens then, of course, is that company stock prices fall, and then they end up cutting jobs, and then it's a cause and effect, and they create a recession as well. The fact that we've come back, we've given back 30% of the gains. I'm not really worried about that as a technical definition, because that some of you might have heard that sometimes, you know, there's a percentage correction, and that goes by definition, or that is by definition a recession. Usually a recession is kind of 2 quarters of lack of growth. But within the bigger picture, if we didn't know about things such as, if we didn't know about recession, we were just looking at a chart, this would be acceptable. It would come back into this area. Then I'm expecting a bullish candle here. So I'm expecting a bullish candle potentially in July. And then, you know, statistically, there's some interesting stats on years that have really big corrections. They can often have brand new highs before the end of the year is out. It's possible. It's not impossible. It's actually something that's happened more often than not. So, and I think there's a lot of people, when they eventually have money here, that they'll be looking to buy into that. So in answer to your question, yeah, I mean, there is the possibility for a recession. And it's interesting because, you know, 4 months ago, companies, 2 months ago, companies are claiming they've all-time record profits, you know, that life has never been better for them. And you've got people who've, you know, finally, and this is just tragic, finally, you know, they get a better salary. And of course, the cost of everything has gone up, just like swallowed up the gains. So I think we'll have to deal with that. Our first thing is to understand we need to, ideally we want to resolve this war in Ukraine, because once the war is sort of shut down effectively, then that will release some of the inflationary pressures. Banks are already hiking rates, that's going to help. And then that leaves us, yeah, I mean, so the war's a big one, and then eventually the supply chain issues will sort of work themselves out. So I think we have to keep in mind that the reaction we're seeing now is tied to some of these other issues that are, that, you know, if they go away, the conditions change. So yeah, it is possible that if this stuff isn't resolved, if the market doesn't cool down enough and then the buyers don't come back in, that we could be in some sort of recession for a while, which is bizarre considering I feel like we just got literally just got out of one, and here we are. Okay, so it's a really good question. We're just gonna have to play it, you know, month by month. But what I want to just talk about what I expect the market to do. I'm looking, you can see here, we pull back, we produce a green candle, and then the market takes off. We pull back, produce a bullish green candle, and then we take off. I'm looking for that. So you might have to get, so that means that, you know, I don't think this month is going to turn into a green candle. If it does, that's our sign. But if not, we're looking at the earliest we're looking at is July is to get one of those candles, and then that could be the potential bottoming. So in terms of sort of buying stocks or looking to add up, you know, if I want to, I don't know what's wrong with me tonight, that my I'm usually speak very well, and today I just feel like I'm having trouble with the words. If I wanted to get more Bitcoin and a few of these other things. So first of all, let's just kind of recap. We've got the market here. If we go and have a look at some of the others, I just want to point out Australia, some of these where you can see where their corrections are in line with compared to the US. So then, you know, the corrections are smaller outside the US, the Germany as well, again, coming back into this area. That's a very optimistic sign. The FTSE as well, which has never been a big grower historically, is also kind of coping okay. Not to say that if things don't get diabolically worse, that, you know, we'll have to deal with it. But this is the thing. I mean, how many people, if you do just a quick survey here, how many people do you know, or, you know, anyone who's listening tonight, who most people, I think, are somewhat satisfied with their jobs, maybe not the work-life balance. We need to fix all that stuff. But whereas, you know, 3 years ago, most people were kind of weren't making any money. So it kind of seems to me that in many ways, there are the fundamental building blocks are not necessarily that they're not, you know, they're not necessarily in any real danger. We should actually be able to recover from this. So I choose at this time, and that's acceptable for me to say this, the language I use and the way I frame it is important. I'm doing it as a trader. I'm not doing it as a salesperson. I'm saying I choose at this time to see this as a much needed correction, and I have faith that at some point this will recover. But the clue for me will be the first bullish candle that we get there. So we then move across and have a look at, I actually wanted to have a look at some of the other markets as well. But let's go across. Why is it now? There we go. Let's just do this one. Okay, so if we just compare, for example, almost side by side, you can see Bitcoin and the S&P, very, very similar. But there are a couple of things I want to highlight here. We have fresh lows on price. So this low is lower than this, but we have higher lows, certainly on the MACD. This is not really giving us anything. So that would usually be a sign of potential exhaustion. Not really showing much there. Let's go look at cryptos. Let's look at Bitcoin. So again here, fresh lows, nice and bullish. Yeah, it's not really, not too much happening in that one. Let's go up to the monthly. So what I spoke about the last time we were analyzing this, because we obviously going to be updating it on a relatively regular basis. Let's just do that, and then let's just duplicate it. We bring it down. We've got a couple of other things. We've got some nice round numbers. 20,000, 30,000, 40,000 are some really good numbers. And we've got another one over here. There we go. Okay, and again, it's coming down towards that sort of 50 moving average. All right, so I spoke about this last time. I said that it was range bound because we had produced a high and a low and then a fresh high, but you could see that it stuck within that range. And then it came back down. And in fact, I think I used another level that was probably placed up here as well. And so I said that if it fell through this, well, I said if it's range bound, and therefore my expectation was that if it recovered, it's going to go back up to the range. It's broken outside of this, so I think it's safe to say that we are not range bound anymore. The only thing that could mean that the only thing that could change that says it's still range bound is if the next candle is green and it pushes us back into the range, and therefore it's like it's a rejection or a false breakout. And this could very well happen. So the key thing is that we broke through those levels. We're coming down, potentially down towards these levels here. And now it gets tricky. This is where it gets dangerous as a trader, because the lower we get, the cheaper that cryptos get and the cheaper that equities get, stocks, the more people are prone to buying them. Most people want to buy everything at a discount. And so actually they tend to slow down as they fall, because might not be enough to turn the tide or to change the trend, but it definitely attracts a lot of buyers at this point. So I'm just always very cautious of shorting these markets I would rather kind of go, okay, what do I need to see to know that this has started to turn around? Okay, so I'm gonna go and let's just go through these. So we'll do Ethereum as well. Okay, so we need to keep an eye on both the US indices and cryptos at the same time. We'll need to keep an eye on both of them at the same time to see ultimately what's happening. All right, and so I'm expecting the markets to, in this area, I'm expecting to turn around. And so the most dangerous parts when we're trading is when there's a trend up like this, it's fine. And when there's a trend down, it's fine. But we get these areas where the market doesn't really know which way it's going. So it starts to drop, but then it tries to recover, and then it falls, and then eventually it does move. And now I think we could be entering another period similar to that, where the market is now going to attempt to turn around. And that could take, again, could take a couple of months. And so that's what I'm going to be looking for here. Does it mean that the market can't fall further? Yes, it can. Of course, it can still fall further. But it is definitely in an area where I think most of the heavy falling has happened. So let's talk about, look, I mean, we talk about how past performance isn't reliable as an indicator of kind of future performance. But actually, if anything, history does repeat itself, because we never tend to think that history is telling us anything we need to pay attention to. So we make the same mistakes, and history tends to repeat itself. So I'm looking for the market to recover here and ultimately have a correction. And we needed it, whatever caused it, we needed it because the market was very hot. And the question now is I guess you could say that there's a limited number of things that can happen now. The market could, I guess, go further, but I'm not really seeing where that comes from. I think that at this point, the market is more spooked than thinking rational. And if anyone ever tells you the market behaves in a rational manner, it absolutely doesn't. Okay. And certainly not now. The market is definitely, you can see the candles. I want you to pay attention to this. Look how small the candles are here, and look how big the candles are here. Candles have grown in size versus this. And that's one of the surest indicators of panic in the markets. Okay, yeah, the candles get a lot bigger. So one of the points at which I'll know the market has calmed down is, and a lot of people talk about this, but you'll know when the candles start to get small again. So when the candles look a little bit more like this, or at least a little bit more like that, then believe it or not, the market has calmed down again. And if the market's calmed down, then it's potentially safe to start engaging in it again. So the next thing I would need to do is look at the weekly. So I'll do this, and then we'll go across to cryptos and kind of add that in. So you'll notice here again, in the past, we have we've had periods when generally here, when we're in a bull market, price is above the 50 moving average, and then we dipped below it. Let's see what else. That was during 2016, but you can see it here as well. That's great. That's what I want. And so here's the big thing. We had this really nice uptrend, and price was above on the weekly chart. So the weekly chart is crucial here, really, to give us not having to wait as long as the monthly chart to produce information, but also better than the daily to give us more confidence that we're reading stuff. So here you can see the price actually started to fall below the 50 moving average, and then stayed below it until ultimately it did actually recover. And it was around about this time where you could say that was the bottom of the market. We know this because we started to break above old highs. So remember the rule of a trend, a downtrend of lower highs, lower lows. And if you come up, this is why we always put our stop loss behind these things, because if you come up here, you've effectively, that trend is done. So you can see the point at which we started to break above these highs, which also resulted in a higher low and a higher high. So then we had a confirmed uptrend. So this was effectively the bottom of the market. Well, I believe that was the point. So you can be specific that the second we broke above here, this candle here, you could have said with a high degree of confidence that we are now on our way back up. And I don't think it would have been wrong to do that. Sorry, my dogs are excited. My wife's come home. Our dogs like to throw a parade whenever anyone comes home. Okay, so that was a really good thing. And so this is what I want to I want to kind of see where we are in relation to that at the moment. So we dip below it occasionally. It does happen. We do. This is during an election year in the US. So the market goes into a bit of a coma. It's a bit uncertain about stuff. And, you know, this is where we are at the moment. So we are underneath the 50. And if we want to kind of look at a worst case scenario, we could see the markets. It probably pays to do, you know, prepare for the worst, hope for the best kind of scenarios, and look for the market to come back all the way back down to these highs before carrying on up. That's fine. Even potentially down here. So I said there's a limited number of things that can happen now. The market is having its correction, and we'll look back in a couple of years' time, and it was exactly what it needed to be. We were overextended, market corrected, we came back, we carried on, and this will. So you got to think about how this impacts cryptos as well, because if people have spare cash, they also want to put it into the crypto market as well. So the crypto market is tied because of kind of fear and panic as well, and it's very much tied to the equities, or at least it's being moved by the big, the fact that the bigger investors now have a chunk of it. So I don't want to get into. There's no conspiracy theories. I don't want to create any paranoia about they're out to get us. It's not at all the case. In fact, if anything, I assure you, I've seen big institutions make really stupid mistakes. So they're not these super cunning things. They have moments of where they make clever ideas, but then, the rest of the time they're just like us. So, limited number of things the market can do. It can correct, and it can return back into a bull trend. And it seems a bit quick for me. If we had all this drama and then suddenly next month we're back up, that seems a bit too quick to me. And therefore I would expect this to be something that might make more sense towards the end of the year. So in my brain, I'm just going to give it a timeline of 3 to 4 more months. We've been in it for 3 months. We just need another 3 or 4 months to get out of it, and that's very acceptable. And we'll go, if that's the case, we'll hit all-time highs before the end of the year. So that'll be great. The other option is that we're about to enter something else. Like you said, we trigger a recession of some sort, and we end up going into, there's fears of stagflation in the US, or just kind of things. So we end up going into a bit of a sideways market, and we've never had that before. That could happen. Again, I'm dubious, because a lot of really wealthy people have made so much money. I think they're just quite keen to get back into making money. So my expectation is that the companies, the McDonald's and the Nvidia and the AT&T, will continue to recover relatively well. And so the stock market tends to shake off most things. And I think that would be my first plan. I would rather just go and say, look, that's what I expect the market to do. If it doesn't do it, what would I have to see to know that the market is not going to recover? Versus what would I needed to see where I know it's going to recover? So in other words, I've sort of mapped out 2 or 3 different ways in which this can unfold. So just looking at this, I want to keep an eye on these major levels. I'd keep an eye as far as price can go. And what will happen on the daily? So again, we'll go to cryptos, because we expect to see the same thing on cryptos. What I need to see happening on the daily is that wherever it ultimately finds support, I think it's very likely that we could see a bit of a double bottom on the daily. So I think we could see something like that happen. That would be a nice clue. I would look to see the indicators. My MACD and RSI would be trending higher, and I would see all of this on the excuse me, I would see all of these on the daily, and that would probably signify the bottom. Okay, so that's what I'm looking for. I'm looking for price to come down to these levels, and again, potentially bounce a couple of times before it starts to trend higher. So I don't expect it to turn around immediately. If it does, fantastic, but I expect it to sort of bottom out for a bit. The market has to know that it's done, that there's just no more, that it's not interested in going further down, it's calmed down a bit, and that it's now considering at some point it's going to start heading higher. And the clue will always be sort of previous highs. We start to break above those, and you get a series of other things, ladies and gentlemen. So not only do you break a high like this, for example, maybe you get a double bottom, so you get a rejection here, and then you break above that, and then you get a rejection, and you carry on. So there's about 6 or 7 things that happen that show that the sentiment has shifted back into a buying mode. And these 2 indicators should be very reliable at that time. I'm looking to get to a point where the market is starting to show more bullish price action. So more bullish price action at the bottom. So we're not expecting this to happen this week. It's going to take another 2 to 8 weeks. I want more bullish price action like this. Nice little bullish candles there, lots of those bullish candles there. Here you can see in a way a double bottom. So those are nice bullish candles. You see a lot more of that. You'll see that show up here. It's very reliable, and it doesn't happen by accident. It just starts to do that itself. And so that's what I'm looking to see. So if I go over to Bitcoin as well and have a look at it here, go down to the daily, you can see we kind of broke down to that level. And round numbers are generally also quite reliable. So 20,000 with Bitcoin, 20,000. There might be some odd numbers here and there, but generally it's quite responsive to the nice round numbers as well. And so again, what I'm looking to do here is if I want to engage in this now, I don't think the turnaround is going to happen quickly. I think if we go back into that uptrend, I think it's going to take 2 to 8 weeks, which means that it's not really worth my while as a trader to be buying now. Let's clarify the difference between trading and investing, guys. If I'm investing, then I'm looking to buy and hold because my plan is long term. It's not the same as trading. What we're really talking about here is trading. So as a general rule, we want to be trading in line with the market. So if the market's trading lower, we want to be selling. It's not a reflection of what we think the potential for Bitcoin is in our future. It's just saying that, look, today or for the next few days or the next few weeks, I will make more money if I short this market than if I'm a buyer. And so I want to start to see that. Same thing again, I want to see more and more bullish candles coming in here. I think it's going to potentially bottom out. If I'm a trader in this, I really want to be more defensive, because as we approach the bottom and the market's going to turn around, the risk of losing trades increases, because here it's picking up momentum. It's now nice and bearish, but now it's shed a lot of weight, and so it's shed a lot of weight, and therefore it's potentially going to turn somewhere in this area. So I want to make sure that I have a stop loss on my trades. If I'm shorting it, you don't have to, but if I decide to sell it, and I want to make sure I'm taking some profits as we go. And I think in the last few webinars, I've spoken to you guys about a 3-to-1 approach, for example, just targeting a 3-to-1, risking 1% maximum and targeting 3-to-1, for example, and maybe taking some partial profits off. There is a phenomenal, if you're all on MT4, MT5, there is a phenomenal tool. I'm giving one of my favorite things away here. It's called Position Size Calculator. I'm just going to find it for you. If you feel that this would be useful to you, it's a tool, free. It's free, that allows you to create your orders very quickly. So you can have entry, stop loss, targets, and your risk can be set to just 0.5%, just straight out the gate. It's just a great little tool. So if anyone is interested in this, let me know, and I'll put the link into the chat box for everyone if you want. But it's a free, basically a free, because the whole thing is, if you're going to be trading, you want to make sure that if you are calculating 0.5%, that it calculates that correctly. So if that is something you want me to do, I'll share it with you. And so that kind of a thing can also split your orders. You can have the position size calculator, PSC, can split your orders into 2 orders immediately. So as soon as there's a script, you have an indicator that you put on the chart, and then you run the script, and it just creates your orders, and it manages the trades. That's really cool. Okay, judging by the responses there. So this is so cool. It's great, man. Okay, cool. It's coming your way. Send to everyone. Failing that, if that link doesn't work or something, then just go and look for just the one you look. Just Google position size calculator to come up with that. It's very cool. And they tend to update it every 3 months or something like that, but it's nice. So I have it set up. So I have it set up. I can either put in a lot per point, or I can put in a risk amount like 0.5%, and it splits it into 2 orders. So one order will be a 1-to-1 take profits, and the other is a 3-to-1. And because everyone is on the platform, we can all do this. So next time I'll tell you what I'll do. Next time I'll set up on MT5, and I'll have that installed so that I can show it to you while we're doing it. It's got a long, it's got a lot of features, so it could take a while to do it, but you don't need all the features. So, and it also monitors your margin as well. Okay, so this is what I'm looking for. I know it might seem silly. The market is currently in a downtrend. I do expect it to bottom out in this area, and I'm keeping an eye on equities. I would be like amazingly surprised if equities turned around and cryptos kept tanking. In the past, they've done their own thing, but not in the last 2 years. In the last 2 years, they've become very much more intertwined with other asset classes, and so I'd be very surprised. I mean, there might be a lag, but actually, I think these people are raring to go as soon as they can. They want to get back into this market. So I'm looking to see that. So for example, there might be double bottoms or more bullish price action coming in here. Those would be the clues on the daily. And basically, here's the thing. It's a patience game. One of the things that I never really appreciated, and I hope that you hear what I'm about to say, I never appreciated how much patience is required in trading. That's where discipline comes from, the discipline to be patient. That means knowing, okay, I should be selling now, and also knowing that if the market's going to turn around, I'm going to have to wait. It's not going to happen overnight. It's not going to happen in 24 hours. It's going to take a couple of days to a couple of weeks before it starts shifting its trend to the upside. And again, that clue on the weekly, I spoke about this last time, I'll be way more confident that we're back up when price goes back above the 50 moving average. So there was a question, sorry, you asked me a question. You said, would I also look for price to go above the moving average lines to indicate reversal? Thank you, you guys are on fire. I feel like I'm sort of letting you guys down. But so yeah, we've got price underneath the 50 and absolutely I would. But guys, we must always pay attention to price action first. So if price action is doing this, that's an uptrend, even if it's underneath the moving average. We need to be looking at, always look at the candlesticks and the highs and lows first, and then add everything else on top of it, because otherwise you don't have context. So what you want is to go, okay, I know that there's information here. How do I read it correctly in the correct order? And the way you do that is you look at candlesticks first, horizontal levels, and then you just take it from there, because then at least usually at that time or at that point, you will have everything in the right order. So once price gets back up above that 50 moving average, to me, that would be just confirmation that we're on our way back up. But that's quite a way off. I mean, we could start turning around and start trending up, but you kind of know where the line in the sand is now already. It's roughly, I mean, obviously if we're above 50,000, we're back up, I would say, but this is somewhere around that 47,000 level, if we can get back up above that. But look at this formation you're seeing here. This formation would work just fine. And it might sound silly that I'm saying this, but, oh, and I've got a book. Okay, again, I've got a book that I think will transform your trading. Okay, it's called On Price Action. Very, very good. The older I get and the more I do this, the more I fall in love with just price action and horizontal levels, because it's a question of faith. You're not quite sure, not only are you not sure you're reading price action correctly, but you're not sure you can trust it. So you struggle to just act on price action signals, and that takes time. So this is what I'm going to be looking for this. And again, so this is an example of what we see here, that if we start to see those things happening here and a shift into an uptrend, it happens. So that is not going to happen quickly. It's going to take a while, and we can do that. And then, of course, once it goes above the 50, absolutely for sure. Cool. And we will even see here, we'll start to see these starting to trend a little bit higher. Let's look at Ethereum by comparison. So poor Ethereum. It's fine. You'll come out on top. Don't worry. Oh, also there's other stuff as well. So the book is called, if anyone cares. So there's Al Brooks, does some really good stuff. And at the end of the day, we are just trading people. So it doesn't matter whether it's cryptos or it's equities. It's the same traders getting in and out of the markets. And so price action just means the same thing. It doesn't change there. And this is called Naked Forex. I have to be very careful, because while I'm typing in Naked Forex, a whole lot of other stuff could come up, especially if I mistype something. Anyway, so this is the one. This is a book. That's just great. I mean, if you look around, you might be able to find a PDF of it somewhere, but if you want to buy it, it's there as well. I think it's really good for beginners and intermediates to do that. And there's some great stuff in that. So there's something that happens to price action as well, is when it's closing near the lows. So this red candle here is closing right near the lows. If we see that, we know that the momentum is still very, very bearish. But actually what happens is when it starts running out of steam, you start getting more of the wicks and the shadows. It starts putting the brakes on. And so you can see here, so far it started to put the brakes on there. So again, we can only become buyers when the trend changes. Until that moment, you cannot be a buyer. So you're still a seller until you get that confirmed change in trend. And that's where patience and discipline comes in, is knowing that this is not enough evidence to show that the market is turning. The confirmation is the change in trend. And if you do that, you'll be on the right side of things most of the time. And so this is where I'm expecting the market to do that. That's what I'm expecting it to do. Yes, I can see we've got FOMC tomorrow night. There doesn't appear to be, guys, I think we're going to continue to see rate hikes until there's a sense that the inflation is under control. and that it's under control. So even if we live in the UK, so I'm in the UK, and I just had the most incredible week in Spain and Italy. I was in Rome and I was in Tuscany. I've never done Tuscany before. It was amazing. But it doesn't matter where in the world you are. The US dollar is still the biggest currency. It's still the biggest cog in the machine, and the US markets can impact the rest of the markets. So you need to kind of be aware of what's going on with the US markets, how stable are they, and then trade around that. So it's very likely that they have a big impact on this. So the question that's just come in is, would I wait until the reversal is confirmed or start buying? You're asking the questions, sorry, you're asking them ahead of time. You're asking the best questions, and I'm obviously reading them. There's a lag between me talking about it and then you've asked the question. You've already asked the question, so that's good. I prefer to wait until I see a confirmed change in trend. On the weekly, as I said, having that, knowing that the market has moved above the 50 will be an absolute confirmation. But by that time, it's already come, quite a long way up. It doesn't mean much now, but if 10 years from now we have a similar scenario, the 50 can always be a great go-to guide for us to do that. Okay, so it gives us a really good sense of where we are. And also, certainly, you can see here you've got the 50, 20, and 10. So think of the moving averages as just additional indicators. They frame price action really well, but they also communicate to you. They go, look, the closing prices are trending higher. The shorter term, medium term, and longer term are sort of closing higher. So right now, what they're saying is, look, the trend is, the price is certainly closing to the downside. But there'll be a point when prices try to get back over those to the upside. Okay. And it's so funny when you look in. There were some clear clues. Look at that higher high. Oh, badly drawn, Adam. Look at that. Look at that. Look at that. Kind of showing that just that range bound and that divergence not looking good. So I would do both. I would kind of monitor both markets while keeping an eye on the US markets as well. And I know that we need to see a green monthly candle. There's no way you can get around it. You need to see a green monthly candle to potentially be at the bottom of this. So that tells me, logically, that unless this turns around, maybe FOMC comes out tomorrow night and maybe there's a surprise thing and the market suddenly decides, okay, we'll take a breather on the strong dollar and it all reverses and we get a nice, bit of a recovery. Sure, that could happen. Alternatively, it's going to be next month, would be the earliest potential green candle, which tells me that I can't expect, does this make sense? That the green candle is going to be the sign that the market is potentially bottoming out. And that means I have to wait until the end of July at the earliest. Could be the month after that, but it tells me that in the market I'm doing now, we haven't turned around yet. And I will get a chance to it's not like you're going to wake up one morning and it's gone all the way back up here and you were like, oh no, I should have got in at the bottom. you, excuse me, the green candle will be a sign that it's probably going to work its way from there, like this. Okay, so that means that we're looking at next month potentially. And what I'm hoping is that I'll be giving one of these webinars and you'll be joining me, and I'll be going, oh, look, there we go. We've got the turning around. That's exactly what we look for. We've got bullish divergence. We've got price action is changing now. Buyers are coming back in. The price action is more bullish. That's what I'm hoping will happen in the coming, in the next 8 weeks that we'll see it happen then. Obviously, in between, I'll be keeping my ear to the ground with regards to fears of recession, and we can often cause things when you go snowboarding. And I'm a South African, so this is a big thing for me. But when you go snowboarding, I always remember the story of don't kind of look where don't look at a tree that you're trying to avoid, because you end up actually just staring yourself into the tree. And so we can actually cause our own problems. I think if we behave with optimism, the market should recover relatively quickly. Yeah, and also one more big tip as well is if you're hearing something in the news and it just doesn't ring true to you, it doesn't seem to, you're not buying it, then that's a good thing. Market analysts can always make mistakes. They can often be wrong. And sometimes they just make calls because they keep their jobs, they're very safe. So they'll announce something that actually everybody's already worked out. They're like, oh, well, you might be heading into a recession. They don't, I think the expectation that somehow they're going to give us clues is ridiculous. I promise you this, all of you who are listening tonight. This is a learnable skill. You can learn to read this. And actually, at the end of the day, you learn to trust your own judgment. At the end of the day, because you've got to. That's where your money comes from. You've got to do that. And it doesn't mean that our opinions will be different. You might have exactly the same analysis as me, but at least it was yours that you kind of built up from the ground up. And the only way to get there is practice. It takes confidence. You've got to do it. It's like anything else in life. The first few times you do it, you're going to be garbage at it. It won't be great. And then after a while, you get a feel for it. You're like, okay. So I'm trying to relay to you what I want to see in my mind's eye, what I'll be looking for, and then take it from there. So again, all three of these markets, the tech, NASDAQ, the Dow, and S&P, I expect to see those kind of bottom out and start to go sideways and potentially produce a nice bullish candle. Again, oversold, overbought isn't reliable enough. There are lots of tools out there that are so-so with how well they work. But if we look at divergence or the trend of these, we get 90%, 95% accuracy, and we can rely on them. Okay, so that's what I'm looking for. I'll keep an eye on these key levels, but not expecting, you'll have to see. I'm not expecting the markets to go too much further. Let's have a look and see. So go back to Bitcoin. Again, yes, it could always, I suppose, come back and touch these levels. It could. It could. I mean, if that's going to be the case, I could trade it to the downside. So how do you know if it still has some room? Well, if I go to the daily, this is a bit of a problem. There's some bullish divergence here, but this looks okay. This is still bearish. If I go to the 4 hourly, so you have to go down until you see what's going on. So for example, here, guys, the MACD is trending lower. I can see here, this is all going lower. I can see that. This is also going lower. So we've got a bit of a trend happening here, and so is this. Generally speaking, it's going lower. So what does it mean? It means this is bearish because I can see it's trending lower. This is bearish and this is bearish. That tells me that the 4 hour is not currently showing any signs of changing trend or exhaustion to the downside. In other words, it should still be good for me as a trader, day trader, to be looking for sells at this time. There are no signs of divergence or anything that tells me it's going to have a bigger correction on the daily, for example. Then I go to the daily, and in this case, look, we're still pushing, we've still got lower highs, low lows, and this is just a bit of a funny one. That was showing how badly this wanted to be a false breakout. It's not offering too many clues there. And then if we go to the weekly, so the 4 hour is really the magic. That's the magic bean. Here you can see you've got price trending lower, the MACD is trending lower, you've got the RSI trending lower. So what does that mean? It means that all the momentum here is bearish. There's no hidden bullishness that we haven't seen yet. Oh, that's a great question there. So you were asking about DXY. I can't see it on my one for some reason. So round numbers again, but let's go and have a look at it from much longer perspective. So it looks like it's been range bound for a while and finally broken out. But there we go. You can see the major levels here. This is the dollar index, guys. So we used to sort of be the top of the range was sort of here. We've managed to kind of, this area where these two blue lines are is kind of there. I've mapped out that. I've mapped out here, because where the market touches from above and below, those are areas I want to keep in mind. And so it looks as though it's very much determined to sort of break out. And that could mean we end up getting a boost, you know, that we're going to see over the next year that it's going to keep doing that. And we'll see if that's ultimately going to be the case. But for now, I just map out those levels plus round numbers as well. For the dollar index, it works pretty well. So it's at 105 now. It'll probably work its way up to, you know, 108, 107, 108, 109, just working those ones. Is it overextended? Absolutely. Is it due for a correction? Yeah, it is, but it's on a runaway thing like this, and that can happen. So it looks to me, it might not even be halfway done. This move might be half of the move it ultimately ends up doing. Yeah, look at it. And also look at how it's becoming parabolic. The angle of it's starting to go straight up like that as well. It's also, again, when it comes back, it's going to have a sharp correction. But that is, so yes, both. So if this is going to be the case, then all of these are under pressure. All of them are just under pressure to do stuff, under pressure. So I think we're going to see these starting to creep cable as well, Aussie dollar and Kiwi dollar. They're all under the same kind of pressure to do that. Dollar yen is obviously doing its runaway thing. We've got dollar CAD is starting to break out to the upside there, and dollar Swissy is going to be doing that as well. Yeah, so I expect a stronger dollar for now. Don't forget, guys, I don't know if you've checked out the YouTube channel, but if you go and have a look and you do a search on, go find me here, you'll get a weekly analysis of all this stuff. And it's good. I mean, I'm not bragging. It's literally, I don't have it here now. But if you go and look for London City Trader or Adam Harris, any of those, there we go. You'll find it. And so there's a weekly market analysis that I'll be doing in that as well. And so it gives you some support if you want some additional, just an extra set of eyes until you feel that you've got it on your own. So where do I think the dollar index is heading? Yeah, 111, 110 I think is good. After a retest, you know, Carrick, nice to meet you. I think, yeah, with that dollar index, yeah, at some point it's going to have to just take a bit of a breather, but yeah, it's on a bit of a move, and I'm not really convinced that move is going to change anytime soon. Yeah, but there's some good news. There is some good news, guys, that if we've been in range bound for several years, if we are finally moving out of that range bound behavior, there's going to be a lot more trading opportunities and money making opportunities on currencies than there used to be. Currencies used to trend so well and so smoothly that they were fantastic, and then they've kind of last 4 or 5 years they've been just really not great. Okay, so just to recap, because we're done, I realize we're 1 minute over, I apologize. Yeah, I think we're in a downtrend at the moment until further notice. I need to see a shift in price action. I'll need to see bullish candles, and I don't think that's going to happen in the next. So I think we're looking at a 2 to 8 week kind of turnaround period, meaning the fastest it could happen is in the next 2 weeks, where literally it just, you can see price starts pushing back up and then comes down and gets rejected, and it starts to, the tone starts to shift from being very pessimistic or very bearish. And don't worry, trust the price action over what you hear in the news. If the price action is starting to look bullish and the news will catch up. So if the market starts recovering, it usually goes for a while before the media starts going, oh, market's recovered, market's recovered. So you always see it in the charts first. Looking at any other questions here? Yeah, okay, that's all good, I think. So there we go, guys. So yeah, we're still in a solid downtrend across the markets, waiting for them to bottom out. Until then, I can be cautiously selling. And then if they start to go sideways, that could be them starting to bottom out. and I'm hoping that by the next time I see you, we'll have a lot more confirmation on that. And basically just assume that they can go further down. Just assume that they can, but keep an eye on those indicators, so that if the 4-hour indicators are still nice and bearish, then that trend should still be intact. Once these start to diverge from price, start going up, then we could be then I would be cautious about selling. Basically, that's where I'm going with this, and that applies. Everything I am doing here applies on the US indices as well. So I'm keeping an eye on those. Okay. So was that it? There we go. Just checking any last questions here. Do you have any more? Yeah, there's some interesting stuff. Yeah. Okay, that seems to be it. Yeah, so the moving average, I'm using it more as a confirmation after the fact, yeah, and not really depending on it as a signal, as a go don't go signal. I'm waiting for price action to do that. It's a habit. So the sooner you start looking at price action first and building up from that, the sooner you'll get to a point where your brain is reading price action. So it's just where you direct your brain. If you start paying attention to candles, your brain will start to interpret them and start reading them correctly. There we go, ladies and gents. So thank you very much. It was a pleasure as always. I love the questions. The more the merrier. Thank you. Thanks to all of you. And again, I'm look forward to seeing you the next time we have to talk about this and see what's going on. But again, I want you to just take away from it that the charts will give us the clues. We'll see them. It's not a sales pitch. It's just come from experience. And it's always a pleasure. Thank you very much. And I'll see you on the next one, Carrick. Absolutely. Absolute pleasure, guys. All right, thank you very much. I'm going to exit I'm going to end it now. That's going to hoof us all up, but have a great evening and a fantastic week, guys.